Everybody, so finally, I'm back with another video after a long time. It's been 2 months. I was not creating videos because I was just lazy. I was just busy in my work. Okay, trading was going very good. Everything was just okay. So I was not creating videos. Okay, but I'm here to educate people for free. My goal is to make good for humans, and I was just thinking of it that I should be creating videos to make people make money, because our goal is here to make money, right? We are not here to just looking up a lot of videos. You can just pick a one strategy what I have created. I'm just lightness for humanity. I don't earn zero money from YouTube, right? So today we are going to talk on my personal model, which I trade and I positive funded accounts. Right, so I would be creating another risk management video on funded accounts. How can you create high income paid from funded accounts, okay, by using these strategies which I create videos on. So the video which I'm going to make is on the M model, right? So this is the M model fashion strategy. I create a lot of videos on other stuff, but this is my personal close to my heart video which I'm creating, right? So this is going to be the M session model, right? So in this model, we are going to add some entry models, right? These are the literal entry models which can make you 10K a month, personally, which I'm using it to make, right? So these are the things you only need to make money. You don't need to earn. I mean, don't need to learn a lot of stuff to get distracted by learning everything, right? I'm just giving you this cup of things to just learn and drink it, as you can understand everything in just single video, right? So the things you need in entry models are the ICD 2022 model. The ICD 22 model is an algorithmic model based on liquidity and imbalance in price, with the key element being time and price. So this is the model which can make you profitable. This is very simple, easy, right? You have to learn it first, right? I would be giving you a little intro on it, but the thing is, I already created the long video on it to understand it more better, right? And another thing is the inversion fair value gap model. This is also the model which you need to understand to make money with that model, which I'm going to teach you, right? So in inversion fair value gap model, the inversion fair value gap forms when a fair value gap is violated or inversed, right? So we have the sell side fair value gap on the leg, and it has been, like, inverted. So we can just consider it if we have the opposite direction fair value gap which has been filled up, and then it is acting as support or resistance for the price to go higher, right? So this is what we call the inversion fair value gap. I'm going to give you the example on it, okay? And the last but not least, unicorn model, which I am going to teach you in that video. So, as unicorn model combines the concept of breaker block and fair value gap, it provides a unique approach to identify trade opportunities. Now, in breaker block, we have high probable setups, but if it is combining with fair value gap, it becomes the unicorn model. I already created a free video on it, so you can just go and you can just watch the video and you'll be understanding the model in very simple steps, right? So now, if we look up at these models which are necessary to understand to make a lot of money, this is enough, okay? You don't need a lot of complicated things. This is what I just want to give you, and simply enough for your trading to make money, right? So let me give you the quick example of the models which I want to just let you know, okay? So this is basically the unicorn model example. So we have the low and high, right? The high, the low, high, right? And we just taken out the buy side and sell side. So this is our breaker block, right? So we hit somehow the high time frame key level if you going deeply into that example, right? And then we have this breaker block and then we simply would be looking for these equal lows, which is the sell side liquidity. So this is what we call the unicorn model. We got the fair value gap and the break block. So this is the high probability setup, okay, you can be looking for. And there's another 2022 model, which is a liquidity sweep right there. We check out the sell side liquidity, and somehow we got the high time frame key level touching it, right? So you have to keep that in mind that we should be having a high time frame key level. Plus the daily buys. Most people do not know about daily buys. That's why they are just in 1 minute time frame. They are just now looking for the high time frame confluence to looking up at the markets. So remember, if you are trading and you're not knowing the drawn liquidity and the daily buy, so trading, I believe, is not going to work for you. I created a daily buys video you can just watch, which is totally free, right? I have not monetized any of my videos, right? So you can just watch it. So we have this fair value gap, and we have this institutional order flow entry deal, right? So we have this fair value gap, and we have the shift in market structure. So 2022 model is sweep of liquidity, a shift in the market structure, and this fair value gap entry, right? So this is what it looks like, right? So let me give you the example of the fair value FVG model, right? So we have the same example, taken out the sell side liquidity, we have the shift in the market structure, and then we got the institutional order flow entry drill, right? Now, what does the inversion fair value gap mean? A buy side fair value gap and the sell side turn, right, are the sell side fair value gap and the buy side turn would be, if it has been disrespected, would be called the inversion fair value gap. If you cannot understand it, it's like, like we got this sell side fair value gap in buy side momentum, right, which we have disrespected, right? So this is what we call the inversion fair value gap, right? If any of fair value gap, if you look up at this fair value gap, which is the sell side SB, right, which has been disrespected, we have closed above this fair value gap. This is what we call the inversion fair value gap, right? So let's go to understand more about this model. So in this model, we will utilize the key elements that are both essential and highly powerful. This is the most reliable ICD model that I use, particularly for trading NASDAQ. It's time-based gem that can help traders achieve expectational accuracy in trading journey, right? So this is the model which I personally trade, right? So this is going to help you a lot. And now we can be talking on the main subject which I was trying to reveal to you, right? Algorithmic time and price logic. So this is the thing which you must know to trade that model. Now in this model, we will be using macros, including the silver bullet. So these both things, the macros and silver bullet, are the high probability time windows which ICD traders trade. So now macros are short time intervals during which price either seeks liquidity or balances an existing imbalance, right? So this is the little time window. We look up at it where we want to see energetic moves after filling the imbalances are sweeping the liquidity, right? So now macros begin 10 minutes into every hour, right? The macro time windows are either XX50 to XX10, which is the starting of before starting of any hour, or XX20 to XX50, 40, right? Or either we have this macro after the 10 minute of any hour, right? Covering both 10 minutes before and after the hour mark. During this period, price seeks liquidity or rebalances the imbalances. We are back on the charts, right? So now we got two things. The continuations are the reversals, right? So we are on the trading view charts, right? So we have this draw on liquidity, or we can say the key support area, right? And then we want to look up at the time alignment, right? So now we got this, right? We got this 9:30, right? Which we can just write it here, okay? This is the 9:30 period time window, right? We want to see the manipulation, right? So this is the drawn liquidity. We have this 9:30 open, right? And now if we want to see price to trade above it, right? And price is just going to trade it, right? And we somehow can find the reversals of it, right? So now we would be simply looking up at the macros, right? So consider this a 9:30 opening price. We want to see the manipulation above this drawn liquidity, which is a buy side liquidity, or either can be the imbalances, right? So we have this here 950 to 10:10 macro, right? Um So if we got the reversal trade, right, we just want to see price to do like it, okay? So we have this 9:30 price, we had the manipulation, and this is what we call the 950 to 10:10 macro, right? And here we would be just looking for the 10 a.m., which is the starting of silver bullet time window, right? And we have the 10 a.m. Now we are not going to just add the positions right there, okay? We want to see the fair value gap after 10 a.m., right? Which can be just here, right? We want to see the shift in the market and the fair value gap. And again, we are not going to add our positions right there, but we will be instead waiting for 1020 to 1040 macro here, right? Which is going to be the leg right there, right? So 1020 to 1040, right? So this is where we want to trade, right? This is the macro. We are picking it and just looking for the sell side, right? If our drawn liquidity is just below this low, right? So this is what we are going to keep in our mind, right? So this is the drawn liquidity. We will be just waiting for it and adding positions from the fair value gaps right there, okay? And then we'll be simply looking for this low. This is the thing you should be looking for if we are finding the reversals after 10 a.m., right? We have the move below, and again we just shifted the structure after, like filling the fair value gap somehow, and then we will be just simply looking for the continuation of the move. But in case, right, you have to just keep the screenshot of it, okay? In case we have just this model, right? We have the 9:30 opening price right there, which is this. Just let me just rename it, okay? This is going to be the 9:30 opening price, okay? And then if we got the continuation setup, right? We have this draw on liquidity right above these highs, right? We are just, like going to have some like move like this, and we got the manipulation down there after 9:30, and we are just going to have some of the manipulation right there, okay? So we will be simply looking for the buy entries, right? So now, like, we have this 9:30 opening price, we're just going down. This is the manipulation after hitting any fair value gap, and then we are just looking for a price to create the shift in the market after 9:50, right? We are not going to trade 9:50. Our focus is after 10 a.m., right? Eastern time. So we have this structure. We are just going to look for the drawn liquidity above, right? Now we have the shift in the market, right? This can be the 950 macro, right? So where price 950 to 10:10, right? 950 to 10:10, right? And there can be the 10 a.m., right? We have this breaker we want to look for, and then we can have the macro, which can be the 1020, right? So we would be just entering off of 1020 to 1040 macro, right? So we would be looking for simply price to close above this high and gave us the shift right there, and we'll be looking for the price to continue go upward, right? This is what we are just looking to trade, right? So let me give you the chart examples to understand it more better. Okay, guys, so this is the example, right? We got the 930 opening price, and we have this 950 macro. We got this fair value gap right there, so we want to see price to go below it, right? We have these lows, which are the drawn liquidity, right? And we have these lows also, right? So we have these lows to target our TPs, right? So now we got this fair value gap after heading into this fair value gap, right? And now if you look up at the change in the state of delivery, we got this fair value gap, right? You can be entering off of it, but we have no macro timing because we want to look up at 10-20 macro, right? So now we have this fair value gap, and also we got the 10-20 macro, right? So after 10-20 macro, we got this fair value gap, right? We have to just simply looking up at this fair value gap. Either we got this fair value gap, right? So simply we would be adding our positions after 10-20 macro, and we would be just simply putting our stop loss above these highs, and then we would be just simply looking for 1 to 2, right? So you can just see how far it can go, and it continues, right? Always. So let me show you another example as you can trade it, right? Yeah, so this is the another example, right? We have this high taken out, right? Which is the manipulation, right? This is the opening time of the market open, right? We have manipulated, right? Our drawn liquidity was just below, right? So we would be simply looking for either 950. You can be trading 950, but somehow it gets manipulated if it is not, like taking out the liquidity. So somehow it is manipulated. But if you look up at the 10-20 macro, right? We have this 10-20 macro, right? So we would be just simply marking it out. We have the shift in the market, and we would be simply looking for the fair value gap after it, right? So this was the trade you can just play, and we will have the volatility, right? If you are just taking out this trade and placing the stop loss above this high, and then you can just aim for 1 to 2, or maybe sometimes 1 to 3, right? So this is what you need to trade, right? You can be turning off of this after 950, but I would suggest you to trade 10-20 after 10 a.m., right? Which I trade personally. Sometimes 950 gets a manipulation move, right? So you would be like, it would be really hard for you to understand it, right? So this is what you need to trade, right? Master daily buys. Believe me, it will change everything for you.